Defense stocks are moving up sharply, and the market feels noisy, unsettling, and full of rumors. Some investors are celebrating, others are panicking, and many are confused about whether this rally is real or just another wave of chaos. But behind this sudden uptrend, there is a deeper story that most people are not fully connecting yet. Welcome to Invest with Sumit. Before we unpack why defense stocks are in an uptrend and what is driving this sudden excitement, make sure you like, follow, and subscribe to the channel. The recent rise in defense stocks has been triggered by growing global geopolitical tensions. News around the United States discussing options related to Greenland, including possible military involvement, has created fresh uncertainty across global markets. When global power equations start shifting, defense spending becomes a priority, and markets react even before official orders are announced. This expectation alone is enough to create momentum. As this news surfaced, defense stocks across India moved higher. Shares of Mishra Dhatu Nigam, also known as Midhani, jumped more than 4% in a single session. Solar Industries India also gained close to 4%. Stocks like BEML, Bharat Electronics, Bharat Forge, and MTAR Technologies moved up as well, while several other defense names closed in the green. This collective movement pushed the Nifty India Defense Index higher, reflecting sector-wide optimism. What makes this rally interesting is that it is not driven by quarterly results or earnings surprises. It is driven by expectations. When global tensions rise, governments tend to accelerate defense orders, modernization plans, and procurement pipelines. Investors know this pattern from history, and that is where FOMO begins. People start fearing that if they do not pay attention now, they might miss a longer trend later. At the same time, not all defense stocks moved up equally. Some names actually fell despite the broader uptrend. This is an important signal. It shows that while sentiment is positive, the market is still selective. This is not blind buying across the board. It is a mix of optimism, caution, and stock-specific logic working quietly beneath the noise. Another reason defense stocks attract attention during such phases is visibility. Defense companies often work on long-term contracts, and once orders start flowing, revenue visibility improves for years. Even the possibility of higher future orders can be enough to lift sentiment today. That is why defense stocks often react early, sometimes much before numbers show up in financial statements. However, this is also where emotional trading becomes dangerous. When headlines feel disturbing and global news sounds alarming, investors can get carried away. Panic buying during uncertain times can be just as risky as panic selling. The smart approach is to understand why the sector is moving, not just chase prices because everyone else is talking about it. The key learning here is simple but powerful. Markets react to expectations before reality. Defense stocks are rising because the market is pricing in future possibilities linked to global uncertainty. Whether this momentum sustains will depend on how those expectations translate into real orders, budgets, and execution over time. If you are watching defense stocks right now, the real question is not why they moved yesterday. The real question is whether this trend fits into your long-term thinking or whether you are reacting to short-term noise. Markets reward patience far more often than panic. If you want daily stories that explain what is happening behind the headlines, stay connected with Invest with Sumit. Subscribe to the channel because we post such market stories every day, and missing clarity during noisy times can be costly. I am not a SEBI-registered analyst. Buy or sell recommendations are not given on this channel. This video is for educational purposes only. Please consult your financial advisor before investing.